In the last 12 months, I've purchased 4 houses. And in this video, I want to share the reasons why and my strategy around creating a retirement plan to consolidate my current property portfolio and have more choices in my life. Now, the purpose of this video is not to brag to you on how quickly or how much value I've built in terms of a property portfolio. The idea of sharing the locations and the dollar values is that's what I want to see. That's what I'm interested in, is seeing other people's journeys and exactly how they're building and creating a property portfolio and strategizing to give themselves more choices. And so that's why I create this content. It's not about bragging about the numbers or figures. It's about creating more choices and freedom for myself and my 2 young boys so I can spend more time with them. And that was the vision that Emily and I had as a couple collectively, that through our 20s working extra hard to renovate and save and build a property portfolio, it was about creating more choices for our future so we could go on holidays, so we could have more freedom of our time, so we could pick up our kids from school and make decisions that suited our family moving forward. And I'm blessed to say that I'm in that position because of the decisions that I've made the last 12 months. So let's take a look at each of these properties. I'm going to break down, we're not going to wait till the end of the video. I'm going to break down the dollar figures and the locations of these deals, and then I'm going to give you more background behind each of these deals. Now on screen, you can see the 4 properties that I've purchased in the last 12 months. In June 2024, I purchased with Emily the Bray Park Bomb, which was a house on a corner block in Bray Park where we were doing a granny flat development. Then we've got in September 2024, Emily and I purchased the Shayla Park property, which is in Logan City Council on the south side of Brisbane. So I purchased one in Moreton Bay and one on the south side. And then most recently, I've made some videos about my 2 property purchases in Bundamba, which is in Ipswich City Council. And each of these properties were $625,000 and $638,000. Now, the big question you need to ask yourself, and I need to ask myself, is why? Why am I doing this, and what's the strategy behind it? My why is very clear about buying projects that I can add value to and fast track cash flow, because that's where I'm at in terms of the consolidation phase of my property portfolio. Emily and I had done the hard work in terms of buying assets. We bought 3 blue chip houses in Brisbane. We then bought a unit block in Coffs Harbour, and these are the deals post the unit block in Coffs Harbour. So 1 north, 1 south, and then 2 west of Brisbane CBD. And you can see that the price is sat between $600,000 to $900,000, which, because of the phase of my property portfolio, it makes more sense to buy the lower price assets rather than buying the $1 million priced assets. And the other thing to note is that each of these sites have some development upside potential. Bray Park, for example, is the granny flat property, which the granny flat is now being completed, and that cost around $200,000 to $210,000 to complete and is renting for $395 per week. We've then got Shayla Park and the 2 Bundamba properties. Each of these deals are on larger style blocks, over 1,000 square meters each. And on each of these deals, I'm planning on working with a mainstream builder here in Southeast Queensland to develop each of these sites for around $300,000 to $350,000. Now, these secondary dwellings are likely to be strata titled, depending on how I want to hold the properties. Or I'll originally do them as secondary dwellings and then strata title them if I want to draw out more equity with the banks. But that's going to increase my initial cost and going to increase my holding costs. So there's some strategy behind each of these deals. The first one is just a standalone granny flat, 1 bed, 1 bath. These deals are going to be a 3 bed, 2 bath secondary dwelling. And then the remaining Bundamba properties are going to be a 4 bed, 2 bath dwellings on each of these sites. Now, you can see that these 4 property purchases total to $2,758,000 of investments in the last 12 months. And if you told me 9 years ago in 2016, when Emily and I started saving for our very first home deposit, that 9 years later, we'd be buying within a 12-month window, $2,758,000 worth of property spread across 4 houses, I would have told you that you were bonkers, that you were crazy. It's just been a monumental ride from the start of our property portfolio to where I sit today. And the reason is I'm able to build momentum and build my knowledge around property investing. And so now I have the understanding of the fundamentals and I can do higher risk projects and take on higher risk asset purchases. I'm comfortable with doing these larger deals and taking on these high risk projects because of the higher reward. Now, the really interesting thing is these properties, without even taking on the projects, would be worth over $3 million since I first purchased the properties, which means just by buying these assets alone, the equity or value has increased by over $250,000 in a 12-month window. And this, in my opinion, comes down to buying well. When I'm looking at property, I want to buy with growth first. Even though these are cash flow deals, I'm still buying with growth fundamentals in mind. And so that's going to be the location and land that does the heavy lifting. So we're looking at where the property is situated, what street, what suburb, what's the growth potential of that area, and then also looking at how to further get value in terms of the block size. So because all of these blocks have good size frontage, drivable side access, and the ability to develop and add secondary dwellings, they all have upside potential, which means that the value of the land is strong. So you might be wondering how I was able to fund these property purchases. And the way it was done was through refinancing equity out of my current property portfolio. I work with Nevada and the guys at Cube Home Loans. If you head over to purposeproperty.com.au, you can have a chat with my mortgage broker and his team. The great thing about our mortgage brokers is they helped me go from $5 million towards the $10 million mark in terms of the property portfolio. And the way that was done was through strategic refinancing of our assets, moving a lot of them to NAB private banking, and then looking at other banking options with second and third tier lenders to get access to more cash for more deals. And so that's exactly how I'm going to move into this retirement phase of my property portfolio in terms of generating stronger income. With each of these sites that I've purchased in Shayla Park and Bray Park and the two Bundamba deals, I'm adding those extra dwellings. And yes, that might cost $200,000 to $300,000 per dwelling, but the rental return is expected to be double per week in terms of the yield. So if I spend $200,000 on the build, I expect to get at least $400 per week in terms of rent. And same with the bigger builds. They're going to cost around $300,000 to $350,000, and the expected rent would be $600 to $700 per week for the new builds with 3-bed, 2-bath or 4-bed, 2-bath layouts. And so what that means is basically the land is almost free in a way because I've bought well in terms of the land size. And this really boosts the yields on these property deals. You'll see once I add the secondary dwellings onto each of these sites, the net yields for both the house and the secondary dwelling will sit around 6% in terms of gross yield. And I've done a video recently which breaks down all the numbers in detail on some of these recent deals. At this current stage, I currently own 6 houses in southeast Queensland and the unit block in Coffs Harbour. And long term, I'll probably sell down some of the assets to reduce my total number of holdings, but ideally have boosted cash flow because I've got a unit block and because I've got houses with multiple dwellings on those sites with boosted yield potential. And that's exactly how I plan to retire from the property portfolio. Building out the passive income will give myself more peace of mind and more choices to build my business and spend time with my kids and give me that freedom that I've always looked for. I'm a person that loves autonomy. I like being able to control my calendar and to be able to work out and have holidays and plan my schedule. And so I've worked very hard the last 9-10 years. And I'm very excited for the next 10 years to be able to enjoy all that hard work. And I don't want to be someone who continues to work away 50, 60-hour work weeks when Emily and I, as a couple, and now myself moving forward, have the ability to make more choices and use my time well. And so I've become more efficient. I think that's what you find when you get to this higher and higher level, is that you make the decisions that are going to move the needle more. And so this is going to move the needle more in terms of my property portfolio. Buying 4 houses in a 12-month window has been a massive decision and also had big implications on the financial outcomes for myself and my family. Because I was able to buy $2.75 million worth of property, that's grown to over $3 million worth of assets in terms of value. And then I'm doing further value add projects on these deals. That's where you're getting the compounding effect take place. Now, I hope this is aspirational for you. I don't want this to make you feel dejected that I'm now moving at such a quick pace that you can't keep up and you can't do anything in your own property journey. This is ideally inspiration, not something to detract from your own goals and your own journey. Buying houses is not the end goal. It's freedom of time and freedom of choice, and having the ability to help others along the way. And so that's exactly what I try to do in our business Purpose Property. If you're looking to buy a house in southeast Queensland in the next 3 to 6 months, or you want to pick my brain around the strategy of doing all of this, then head over to purposeproperty.com.au to book in a free chat with myself. Most people can't start with buying 4 houses in 12 months. But if you have one property, which might be your own home or one investment, or you're even looking to break into the market, focus on your very next step. Focus on the savings goals. Focus on acquiring that first deal and then how you can leverage out of that first deal to buy your second property. It's all starting with the fundamentals and the basics that then enable you to end up where I sit today in terms of building the asset base and continuing to grow and expand. I don't know many other people on YouTube or online that are willing to share this information at this level of detail. So if you could do me a huge favor and subscribe to the channel down below and drop a like on this video if you appreciate the transparency and the visibility in terms of the content. And give this video a click over here if you want to see the numbers broken down in detail on my most recent deals where you can do a house and a secondary dwelling. So I'll see you in that video. All right, peace.